The broadcast is now starting. All attendees are in listen-only mode.
David?
Yes, this is David.
David, hello. Somebody has actually started the presentation, which is not good. I'm going to change the presenter to you immediately. I think people will be able to hear us at this point, so just so you're aware.
Okay, I have a pop-up that says show my screen.
Right, okay. See, don't show your screen. Well, you can do if you've got a lead slide. At the moment, what it's doing is it's saying waiting to join your screen, and it's showing the introduction. All right, so you could leave it at that until we're ready to go. Unfortunately, though, as I say, if anybody clicks the start the session, it then does start the live interaction.
Oh, I was really just dialing in to make sure I'm using a headset that the audio was.
Your
can
audio,
you hear?
yes, your audio is absolutely perfect. No problem at all.
Good, and I can hear you well. So you'll just let me know, and I'll click on show my screen when the time comes.
Absolutely perfect. Absolutely wonderful. Yes.
Thank you.
Mike, are you back on?
Yes, but I'm on mute. I can't unmute myself.
You are. No, we can hear you.
I can hear you, Mike.
Well, it says I'm on mute.
That's interesting. You are not showing us on mute this end.
Good. I'm glad I wasn't doing curse words or anything.
No. Especially as we are now. I think somebody caught.
Tell us what you really think, Mike.
No, right. Please don't. We are now live. I will let you know. Somebody clicked the wrong button, so the session is live, so people can hear whatever is being discussed at this point. They cannot see.
That's all right. We're not going to tell you anything bad.
No, I just always worry.
We can only say, it's great that David didn't get called away to some emergency internal meeting, which,
yes,
that's always the worry.
Exactly.
We still have 9 minutes, Mike.
We haven't.
Thank you very much, David.
You're going to have to count down every minute and pray in between.
I just wanted to make sure the audio was good, that everyone could hear me clearly.
That's absolutely perfect. Absolutely perfect.
You're not going to be in London next week, are you, David? Like for the Data Management Summit in London?
No, not that I know of. No, I'm in Boston all next week.
Because I'm going to it. I'm on a panel with a bunch of regulators on regulatory reporting modernization. So I just figured that with the work that you have been doing with fund reporting, you would have been a prime target for them.
I know people can hear us, but we should have a call offline. There was a call last week with one of the UK regulators about regulatory reporting. So let me fill you in on that, so you're prepared before you go.
No, that's fantastic. I don't think there's any secrets. So I have no problem with people hearing. We're showing FIBO to the Bank of England next week or the week after next. So we're going to do a full demo of interest rate swap capabilities, and yeah, that's very exciting.
Yes.
We'll just teach people to get to our webinars early so they can hear the real stuff that's going on. So Carol, when David is complete, we will go through all hand-raised questions and then turn it over to me, correct?
Absolutely. Absolutely. Hands raised and anything that's typed in.
Good.
Hello, Carol. Hello, Mike. It's Mani Kiran.
Hello, Manny. Welcome.
Hi, Manny. It's David.
Oh, David. Welcome. Good morning. So, David, can we quickly check the logistics to see your screen for a second, and then we can take it back?
All right, so I'm going to click on Show My Screen.
Yeah.
Everyone will be able to see that, so as long as you're aware.
Yeah. Only the cover page. Yeah.
Just the welcome page.
That's enough. Yeah. Or even we can show the PowerPoint. Yep. Very good. We can see it.
Right. How do? Okay, I see.
Slideshow mode
okay.
would be good.
Yeah. When I go into show the slides, I wanted to make sure I could shrink the menu on the right. So I'll just go straight from this to slideshow. Like that.
That's it. Perfect.
But Manny, Carol's going to welcome people. You're going to say a word, introduce David, and we'll move from there, correct?
That's correct.
Good.
And then I'm not going to talk about any other things. I saw the emails just now that you're going to cover that 5 slides that you have at the end.
Oh, you want me just to take it home then, as opposed to giving you the last word?
Last word. No, finish all the slides. Yeah. For today, just finish it off.
Perfect.
Unless you want me to pick up anything, I'm more than happy to do it because I was not aware of that slides. So.
Well, I just made it this morning, so based on your request.
So, Carol, do I need to do anything to give the screen back to Manny?
No, you can just keep it.
Yes.
We're not. Yeah. Go ahead, Carol. Sorry about that.
Sorry. So you're not going to be actually transferring the screen over to Manny. It will just be audio, won't it? Which your lines will remain open.
No, Carol, you're going to transfer the screen to me when David.
To you, I will transfer it to you. No problem at all.
Right. So David, you don't have to do anything other than present content.
That's one of my best characteristics, doing nothing.
Yeah, me too. Very good at it as well.
David, do you want to stop showing your screen? Click on the stop showing your screen just for the minute, just so that it's not confusing for people joining. Perfect. Thank you. Right. Good morning, good afternoon, everybody. Hopefully everybody can hear me. This is Carol Mahoney from the EDM Council. Welcome to the FIBO user group meeting. We're just about to kick off. We have got over 270 people who've registered for this event, so it will take a few moments for people to join. So while we give people a moment to join the line, just a couple of housekeeping items. Because of the number of people that will be on this call, we will have all the lines muted and they will remain muted throughout the session, just so everybody can hear clearly. We will be taking questions at the end of the presentations and we'll give plenty of time for those questions. If you have any questions, please type them in as they come to you, and you can type them into the questions section on the GoToWebinar control panel. If you have any issues or any problems connecting or hearing, please connect to me via the chat message or send me an email at cmahoney@edmcouncil.org and we'll look into those. I won't delay any further on this part. As I say, we will just give a few moments for people to join. We will be recording this session and we will make that available to everybody on this call or who has registered. So thank you very much. I'd like to now introduce you to David Saul, the SVP and Chief Data Scientist at State Street Corporation. David, you can share your screen now, please.
Thank you, Carol. You should be able to see my screen in full screen mode at this point. What I'm going to do for about the next 45 minutes is describe to you two proof of concepts that State Street has done, one for interest rate swaps and the other for fund reporting, both of which used FIBO as the focal point for mapping of the data. I'm going to assume that everyone is familiar with FIBO. So normally when I do these presentations, I provide an introduction to semantics and ontologies. I'm not going to do that today, so I can focus on the materials. This is the mandatory disclaimer slide, which basically says that what I'm presenting today represents my opinion and not necessarily any commitments on the part of State Street or any of its subsidiaries. So before I get into the two proof of concepts, I have one slide here, and I think it's a good one to start off with because it answers the question, why did we do these two proof of concepts? And these 5 elements are what I consider as the foundation for any enterprise, whether in financial services or anywhere else, that represent the fundamental tenets for a data strategy. And in particular, as I go through the proof of concept, 3 of these will become very apparent, even though all 5 of them are represented. Obviously, semantics for the representation of the data, but open, and certainly FIBO represents an open industry standard and standards. But you also see elements of global and scalable as I go through this. The other thing I should say is on both of these proof of concepts, the key to their success, and they were both successful, is the people who actually did the work. So while I'm talking about it, my job was really just to be a catalyst. And what you're going to see here is work by business people, technical people, vendors, regulators, and others, that their collaboration is what gave us the results. So let me talk about the first one, and I'm pulled this from a, okay, hit the wrong key. I pulled this from a presentation I did, and I didn't realize at the time, but this is actually 3 years ago when we first did this work. And the first proof of concept was to take real derivative data and see whether FIBO at that point, and we limited ourselves to only the portions of FIBO that had actually gone through the full standards process with the EDM Council and the Object Management Group. So we weren't doing anything that anybody else could not do at that point, and see whether we could map derivatives data into FIBO, and whether that mapping, if it worked, provided any insights into reporting, analytics, perspectives on the data that were not easily done using traditional methods. So we wanted to be sure that we were using real unmodified data that were coming from a production system. So there was no synthetic data involved with this at all. And we also wanted to try out some of the software, the platforms on which we could host the data model to see how easy it was to map data into FIBO, and in particular, what we could do without requiring any programming or coding. So State Street, we worked with our State Street Global Advisors, which is our investment management arm, and the business people there who had who run the system and had detailed knowledge of what the data represented. The EDM Council provided us with the FIBO model, so we downloaded it from the EDM Council site. There was no special provision made for this. Cambridge Semantics, and this is by no way indicating they're the only vendor in this space, but geographically they're in the same city we are, so we know them pretty well. And I should say we did this was a very low budget operation. So Cambridge Semantics gave us a temporary license to use their software. So that was also an incentive to us in that it didn't cost anything. And Dun & Bradstreet joined later on. I'll explain that in a little bit when I talk about the process we went through. We realized we needed access to some business entity data, and again, Dun & Bradstreet gave us a no-cost license, a temporary license for that. And then finally, Wells Fargo, and specifically David Newman, was available for consultation. We didn't have to use David a lot, but it was really good to have him there when we did have questions. So that's not something that everybody else would have had. So the next slide is a diagram of the different components of the proof of concept, and I'll start in the middle, which has FIBO itself, and then underneath that you'll see ANZO. ANZO is the name of the Cambridge Semantics software that provides the industry standard triple store for a semantic database, and that was unmodified, and we were using the version they've enhanced the software since then, but this was what we had available to us. In the upper left-hand corner, you'll see the OTC derivatives application that State Street Global Advisors uses. It's a third-party application. It's called Front Arena. So we don't have access to the source for that. We're really just a user of that application. And what the business area did for us is they took initially a very small sample, a dump of unmodified transactions, and put them into a CSV file. And eventually we expanded that to a full day's worth of transactions, so that if you remember the scaling point, we wanted to see whether we could handle a full day's worth of transactions. And then on the right-hand side, what you can't see deliberately, because it's real data, are some of the reports that we were looking to get out of this data mapping. And some of them were traditional spreadsheet-like reports. The middle picture is a graph showing how the data is represented. And in the bottom, some heat maps. So we were able to look at data flows. And again, all of the things on the right were done with no programming. Let me go, I wanted to go back. All right, sorry about the screen there. The computer decided to move ahead without me. When we started to do this, we thought we only needed the triple store software and the operational data. We quickly realized that in mapping interest rate swaps, that the Front Arena application had its own proprietary way of identifying the entities who were associated with the swaps. And one of the things that we wanted to be able to do was to have the semantic model aggregate for us hierarchy. So we would be able to look at multiple business units that rolled up into a parent. And in order to do that, we needed that data. So we approached Dun & Bradstreet, and they agreed to provide that to us. Now, remember, we were doing this 3 years ago. If we were doing the same thing today, we would want to standardize on the legal entity identifier, or the LEI, but at the time, we were still early in the adoption of that. All right, so let me talk about the stages that we went through in the proof of concept. Okay, one of the slides I was going to show isn't in here, so I'll describe it to you. The first thing we did was to download FIBO and put that into the ANSO software, and that was a very straightforward process because FIBO is represented as a RDF OWL standard. The ANSO software understands that natively, so that whole process took us less than an hour, and most of that was due to unfamiliarity with the software. We had a lot of help from the Cambridge Semantics folks. Next was taking the mapping of the transactional data, the interest rate swap data, and here we'd never done this before. We needed the business people. We thought, well, this is probably going to take us about a day. We'll split it up into 2 half days. We'll get access to the business people. We'll go through data element by data element and do the mapping. In the end, it took us less than 2 hours. Most of the data elements, and just to give you an idea, I don't remember exactly, but I think it was between 70 and 80 data elements to fully represent everything within the interest rate swap transactions. A lot of them were the Cambridge semantic software was able to recognize them just by their very nature. So something like a date, and some of the more straightforward ones like currency and country code and so on. At the end, we were taking a break, and as I remember, was an afternoon. We were down to one data element, and we couldn't find it in FIBO. So we got David Newman on the phone, and in about 5 minutes, David told us we were looking in the wrong place, and we found it and we mapped it. So to the now getting back to this slide, to the first point, we were able to do the mapping easily, but the key was having business people who understood the data. If we tried to do this without that, it would have been a lot more difficult. And mapping FIBO back against a legacy data source, which the front arena data is in that category. And then, as I said, we discovered quickly that we had fields for the entities who were taking part in the swap, but we weren't able to create hierarchies. That's when Dun & Bradstreet stepped in, and in hindsight, it was very fortunate, because one of the advantages of a semantic data model is that adding an additional data source doesn't require you to go back and remap what you've already done. And so by adding Dun & Bradstreet, which again, they gave us a linear file that we mapped into FIBO, proved conceptually that semantics really can expand in that way. It wasn't all as smooth as I've probably made it out to be to this point. There is learning involved. We borrowed a database administrator to, and we borrowed a development server internally where we did this work. This is someone who was very familiar with relational databases, had never seen a triple store before, so there was learning involved, learning the interfaces to the Cambridge semantic software to do the mapping, and we think this has improved quite a bit in the time since we've done this, and the EDM Council and their efforts on education have been very helpful in this regard. Again, disclaimer, I'm not saying that Anzo is the only software, but it worked very well for us. We had no real difficulties, certainly mapping FIBO into it, and the vendor's done that in a number of other cases. The outputs and the screens that we were able to present, the tables, the graphs, the heat maps, without doing any coding, were also, once we learned the software, pretty straightforward. Our main issues were we were doing this borrowing people. We borrowed people from the business area. We borrowed a database administrator. We were very fortunate that both of the vendors gave us access to their people. So it really was not technical issues, but the traditional things that you have with any project. And the last point, and I think the most important one, is that FIBO really works. And a question I get, and this is my last slide. This is actual real data that's produced from the model, where we were able to do things like look at swap flows between different geographies, currencies, counterparties, and I understand, I haven't seen it recently, that this is an area where the ANZO software has been considerably enhanced. So if anyone's talking to the vendor, you should ask them for the latest demo. This is my last slide on the first proof of concept. I want to get on to the second one. I'm going to anticipate a question, which is where did we go with the proof of concept? And we had really poor timing. Just as we were finishing and producing charts like the one that you see here and starting to show them around, the business people were pulled away to deal with an important business merger, which is only just now finishing. So, we lost our sponsor, but we have shared the results of this as I'm sharing it with you today, including with regulators who have shown a great deal of interest in what we've done. So I'm going to move on to the second proof of concept, which occurred about a year and a half later. And the background on this was I was on the road being an advocate for semantics and was well aware that University College Cork in Ireland had been active for quite a while in semantics, and our paths would cross at various conferences or OMG standards meetings. And I was in Ireland in our State Street Dublin office talking about semantics and what could be done with that. And we were joined by some people from University College Cork. And one of the attendees at the session, who may be on this call, brought up a regulatory reporting requirement that all of the financial companies in Ireland have to do for quarterly reporting to their regulator, the Central Bank of Ireland, on funds, basically showing beginning balance transactions and then fund balances, and asked the question whether semantics and FIBO might have an application to this data from State Street. And took us a while. On that same trip, we also went and talked with the regulator themselves, the CBI, and told them what we were thinking of doing. We formed a relationship between University College Cork, Business Information Systems, State Street Dublin, who has the business data that's included in this report, and started this proof of concept project to see if we could map that data using an ontology. And the way it was done at the time was the data was primarily drawn from a relational database and had to be transformed into a spreadsheet, which is the way the CBI received the data. So that was our objective and the background. The proof of concept, the outcome that we were looking to have was whether we could map that against an industry standard, which is the FIBO model, and whether we could take the specific data from the State Street system, and FDR is the internal name for the data warehouse, and its metadata specifically for equity and bonds, and map that. And again, we were using the standard RDF, and whether when we were done, we would not only be able to satisfy the regulatory reporting requirement, but now having the data in this model, could we do additional queries against it and create a working prototype? So this next slide, and they may be on this call, so I should do a shout out to Darrell Lawler from State Street, Dublin, and Oliver Brown from UCC, who were instrumental in both pulling together and organizing this and doing the work. So the idea here was, could we take this FDR data, relational data warehouse, map it into an ontology that would enable us to do queries that might require, that you could do today, but they would require quite a bit of programming, but could be done using a semantic query to say, and the example shown here is, show me all of the fixed coupon bonds within this within this set of data. And I'm trying to be mindful of the time here. So the approach we took was to take the data and again in an intermediate form with CSV to transform it into RDF and create this intermediate model. And then after doing that, use FIBO and the query language. In this case, the triple store we used was open source, so Stardog. Yeah, just to make the point that there are multiple open source and vendor products that conform to the W3C standard for RDF and OWL, and you can use them interchangeably. And I'm going to get back and talk about the data quality point. In hindsight, we should have realized that in doing this, we were also going to be checking the quality of the data in the sense of its structure and consistency. That was not our initial goal. It was really to focus on automation of this report, replacing the manual steps, and also what kind of queries and insights we could do. So here's a quick illustration of some, not all of the characteristics within the various funds, and how by mapping them semantically, we could look at them across a whole range of ownership, country, different perspectives on the data. I think the next slide has, and this is not complete, but this is a high-level view of the taxonomy that shows the kinds of funds that we were looking at, and you can see very well how a graphical representation, which FIBO lends itself to naturally, shows, for example, up at the top left, everything's a financial instrument. Within that, it could have the characteristics of either being a security or an over-the-counter instrument or cash. But then within security, you have different types like equity and so on. This taxonomy became important because when we got to the point of mapping into FIBO, the FDR data warehouse represented about roughly 200 data elements. So you can see this is not a complete taxonomy. At that point in time, which is 2 years ago at this point, about 140 of them had been mapped and standardized in FIBO, and some of the others were on the roadmap. What we were able to do is take, and I think the number ended up being 62 in the end, taking FIBO and extending it for different types of funds that had not yet been mapped into the standard. So the example that I remember is we had real estate investment trusts, which were not yet in the FIBO standard at that point. But if you think back to the taxonomy, we inherited everything that was apparent in the taxonomy, and the only things that had to be mapped were what was unique to a real estate investment trust. So, for example, identifying the particular piece of property. And then we, in turn, yes, it is 62. We, in turn, or UCC and State Street Dublin, contributed those new definitions and relationships. So it was not, remember in the ontology, it's not just what it means, but where it sits within the relationship. And here are some of the examples and the one specifically that I mentioned for real estate investment trust. So while it wasn't our intent, going into this, we didn't know how many we would be able to map out of the box. One thing we did learn was how relatively straightforward it is if you're adding something that's just a variation on what already exists within the ontology. You only have to identify the differences, and since everything is represented in a standard, the contribution back into the community. So it makes that point, and it also strengthens the importance of collaboration. Okay, this is a little bit of a review going back, but the current report, MMIF is the name of the report that's submitted, and this would be true for every institution that has to do this, has created their own version, because where they're sourcing the data from is different, and each one of these is custom made and custom built. One of the issues is that each quarter the CBI has the potential and often does alter what they're asking for in the MMIF report. What that means is if you built a custom solution that, let's say, uses ETL technology and takes it out of a relational database and puts it into the report form, you have to redo that every time if changes have been made or required by the regulator. Whereas the using a semantic model as an intermediary, the only thing you have to do to the ontology is make the changes. Anything that hasn't changed can carry forward. Again, summarizing what we did in terms of the data, the mapping, we had good access to business people within the State Street Dublin office who understood the data, what it means, understood how the existing application worked. So that was invaluable to us in doing this. The benefits from this proof of concept is while we did this for a single regulatory report, the process, how to do the mapping, really would apply to many other regulatory reporting requirements and opportunities. And in particular, if that same data needs to be reported in different ways or different formats to different regulators, you only have to do that on the downside end. The input into the ontology doesn't have to change. And of course, from a practical point of view, eliminating the manual steps makes it faster and less expensive. We also think that it demonstrates leadership and in particular connection to data governance and management as you get into the whole BCPS 239 space, where you really have to show that you have a robust and mature data governance program. One last thing, I think I have on the slide here. Yes, this is not going into it. We were really not focused on data quality. When we talked to and presented the results of this to the CBI, they told us that data quality coming from the various sources, they weren't pointing the finger at us or any one individual, but they cited to us a number of examples of data quality where they found that starting balances and adding all of the transactions in and ending balances didn't reconcile. When we did this, we found that mapping into the semantic model looked at data quality issues, structural data quality issues across the range of data. And there were several examples of this, but the first one I think is the most dramatic, and I won't talk about. I'll only talk about that. But we had two different clients who held the same bond, and it was the same bond because it had the same bond identifier. And in each case, there was a different day count showing associated with that data, which of course meant that the calculations would have been different for those two. To find this kind of error using traditional methods, I'm not saying you couldn't do it, but it would require a lot of programming, and you would it would be probably not worth it. Whereas doing the mapping, because within the FIBO, within the ontology, trying to map the same bond and now against a day count, which had to be the same number, it was immediately identified as an error. So there are a lot of things that you can do, and it's also an example of the serendipity when you start to do one of these experiments that you may get results coming out of it that you didn't expect. So that's the final bullet here on data quality, and it also ties back to my point about data governance and management. That is the last of my slides, and I think I've allowed sufficient time for questions. So, Carol, what do I do at this point to open up for questions?
Okay, if anybody has got questions, would you like to either raise your hand on the control panel, or if you'd like to just type into the questions box or into the chat message, and I will release your lines.
While we're waiting for people to do that, Carol, David, if you don't mind, were there any challenges bridging the SME to ontology to RDF OWL gap that existed? Like, do the SMEs need to understand concept modeling and ontology in order to participate in the work?
To a certain degree, yes, Mike. They don't need to understand RDF and OWL, but their expertise is, when you get to a data element that may require, it may be confusing to someone who doesn't work with that data day in and day out. They're absolutely critical to explaining. For I'll try to take an example. When I say price, I think everyone on the call here is going to form say, oh well, I know exactly what a price is, and not realize that they're putting it within the context of their understanding. So, if I'm looking at price within the interest rate swaps, it only is meaningful in that particular context. Whereas if I looked at the price of a bond within the money market reporting, that's only going to have meaning within the context of the particular day on which that price was struck. So yes, there is translation required. We are talking different languages here, but the whole point of putting it, once it's into the ontology, we have translated from the business domain into a technology domain. Let me give you another thing that I should have mentioned. In both of these cases, once the data is into the ontology, you can start to do things that we hadn't thought of before because we weren't able to. You can make inferences against the data. So for example, on the interest rate swaps, the data that we pulled, the transactional data, there was no indicator of what type of swap it was. In fact, we had mixed derivative transactions, some of which were not interest rate swaps, and we were only focused on that one area. But from looking at the data, you could, and we did, infer that it was an interest rate swap because it had two legs. The two legs contained all of the data elements necessary to do an interest rate swap. And even beyond that, we could tell whether it was a fixed or fixed float swap based on that data. So the front arena transaction didn't have a flag in it saying what kind of a swap it was, but we could tell by looking at the data. If one leg was pointing to a fixed number, we knew it was fixed, and if the other leg was pointing to an index, we knew it was floating against that. And on the data quality point, I should say we were also able to find data quality issues on the interest rate swaps if something didn't fit against the ontology, then that probably meant that there was an error in the transaction, and that was either the case, or we were just not looking at non-interest rate swap derivatives, and the majority of our transactions were interest rate swaps.
Yeah, I'm interested in how difficult is it to map SME knowledge into FIBO. So Manny, if you're on the phone, I know that you've also done this kind of mapping at Franklin Templeton. Was there any lesson that you had on capturing SME knowledge and converting it to RDF and OWL?
Yes, it is very similar to what David has shown so far. One difference being, instead of having two sets of team, one SME team from business and other technology teams taking the requirements or whatever knowledge and then converting that into a technology project, what we did was created one team, technology and business team sit together and do it. That way it is going to be much easier in terms of knowledge exchange and implementation cycle time. That is the only difference I can see. But since it is both are kind of a POCs, we can learn from one another, and probably in subsequent future meetings, we can detail out what is the best way to go about it.
Yeah, Manny, I think that would have been a much better way to do it. But since we were essentially borrowing people, we weren't able to. But I think having a combined team, and in particular, this leads itself very well to agile methodology. That would be a much better way to do it.
Very good, very good.
So Carol, I think there are some people that you said have their hands raised for questions. So why don't you proceed, please?
Absolutely, absolutely. I'm going to release the first line. If there is noise in the background, we will have to mute it. Mohammed Jafed, you've posted a couple of questions. Can you now speak? Can you be heard?
Hi, can you hear me?
Yes, thank you.
Okay, thanks. So my name is Javed. I recently joined MasterCard, so I'm new to this FIBO. So my background is in ontology engineering. So I was looking at FIBO ontology, and from my understanding, what I have learned from the website is like FIBO ontology is right now recorded in more than 100 files, RDF files. So when you mentioned that, okay, it was very easy to map the data to the entities in the FIBO ontology, I was wondering, did you use one of the files, like swap.rdf file for mapping, or how was this mapping was done? I was a little bit not clear about
that. Yes, Mohammed. I don't remember, and since I didn't do the work directly, I can't tell you exactly how many of the FIBO RDF files we had to use in each one of the POCs, but I can follow up with the DBAs who did that and get an answer back to you, but I don't know that off the top of my head. Okay. It was certainly it was a handful of files, but one of the questions is FIBO is quite extensive, but if you start with a specific objective in mind, so for example, focusing on interest rate swaps, you can certainly map that. As I say, we did it in rough between 70 and 80. Another implementation that I'm familiar of did it with slightly over 90. So it's a manageable number. You don't want to try and swallow the whole thing at once.
Yes, that's what like.
Yes.
I was trying to understand, like in the previous weeks, I was trying to understand the FIBO ontology, how these things work. I was looking at different files, and each file import some classes or entities from other file. So I was mentioning when you said it was very easy to map. So I was just
well, it is if you've set on a specific functional use case. So
okay.
Nobody. Well, I won't say nobody, but at some point someone may be looking at all of them. Again, I think there's some effort underway to consolidate. So someone from the EDMC might be better positioned to speak to that.
Okay, thanks.
Okay, wonderful. Next line, James Benedict. I'm just releasing your line. Can you hear us? James, I think your line, we're getting interference on it.
Can't hear, unfortunately.
Yeah, I'll mute that one again. Sorry, that's what sometimes happens. Anand Pai. Anand, can you hear us and can you speak? Have you a question?
Sure. Can you hear me?
Absolutely, thank you.
Sure. I'm from US Bank, and I had a specific question about the usage. I mean, the implementation of what you have done is obviously very good and so on. I mean, but my question is more towards the usage of it. You probably know, I mean, you guys are big in the capital market space. You probably know of something called a single name concentration limit, single counterparty concentration limit regulation. Essentially a way for the Federal Reserve and the regulators to make sure that if there is a crisis again, then the linkages between the various counterparties doesn't lead to one single bank having too much exposure. And that really is dependent on having a good, data structure in place to be able to, map all your entities and the relationships between them. So I was looking at this, I thought that one of the good applications of this might be to use that for keeping track of the relationship between entities, ensuring that you don't have multiple IDs for the same entity and so on, and therefore being able to get that report together. Is that something that, or something similar? I mean, it doesn't necessarily have to be exactly SECL regulation, but have you done something like this? Do you have some sort of a use case like this in your organization?
That's a great question and even better insight. Absolutely. So with one of the things that we were able to do with the interest rate swaps was easily look at concentrations, not just with various counterparties, but also geographically and different currencies. So extend that now to a regulator who's trying to do that systemically across the industry. Whether they're in the United States or an individual European country or at the European Central Bank, European Union level. I really don't see any other way to do this on a timely basis except by using a semantic model and being able to aggregate. Otherwise, you're using traditional methods. You're trying to add up. Well, someone calls it State Street over here. Someone calls it State Street Corporation. Elsewhere, it's known by our stock symbol of it on the New York Stock Exchange of it, STT. Conceptually, we all see easily that those three are exactly the same thing. if that's being delivered in traditional database or relational form or spreadsheet form, to a computer, those look like three different things. And it's only by mapping them semantically that you recognize that they are the same thing. And then when you start to extend that to aggregate, so within State Street, our State Street Global Advisors is a business unit. State Street Corporation is the parent organization. Again, mapping that semantically is trivial. To do it with accuracy and precision using traditional programming methods, it's not impossible, but it's very, very hard. And the other thing you see when you start to see graphs, and again, I couldn't show you the details because there's some of it is real data, but looking at graphs that show you the flow of assets between counterparties is a much better way to visualize that and to do risk management and identify anomalies that you might not have been aware of before. But seeing them in a graph is really the best way to do that. Yeah, so that's a great insight and a great question.
Okay, have we got time for any more questions? I know we're coming up to the hour and you've got a couple more things to cover.
So why don't you turn it over to me, Carol? I'd like to close it up with some next steps that we're planning for FIBO. I'm assuming that everybody can see my screen now.
Absolutely.
Yep.
So thank you, David. I know we're coming up against the hour. I'll try to do this relatively quickly. I'll record it for the session, and I will send around this activity to everybody that's on the call. The reason I asked the question about mapping was because we are relaunching what I'll call the FIBO ontology validation process. Right, so let me just tell you where we are. So the first part is, the good news is we have an operating model that's in place, tested, and operational. That's our methodology for managing the ontology, as well as our collaboration capability for linking up people and for testing FIBO at the end. We also have completed what I'll call the contractual underlying building blocks needed to build many of these concepts about commitments and agreements and capacities and roles, etc. Many people have started to talk to me about what they called horizontal or shared concepts that are used as leverage points for building their own ontologies, things like customer and accounts and time and dates and ratings and things like that. Some of them are in FIBO, some of them are needed. So we're very interested in people's opinion about some of those horizontal concepts. Most of the domains, the instrument and process domains, have been derived from existing XML schemas. So what we have is that model from the XML schemas. All of it has been converted into RDF OWL. Some of it has been tested for circular references and processing capabilities, but it's not yet been fully vetted by subject matter experts. And that's the next thing that we are planning on doing with FIBO. So we are starting with our domain of equities because it's mature and robust. We're going to present the common concepts. Then we'll go into the shares, types, and components, including the definitions. We're going to start that with a development webinar probably around April 15th. So tax day will be next FIBO webinar. And then the following week, April 22nd, we're going to launch this working group on equities. So I'll make sure that everybody knows what's going on. Because once we then evaluate what we have from equities, we will do the rest of the domains, right? So debt and loans, the underlying building blocks, all of the things that are required to complete the ontology that we have. The more people that participate, the more use cases that are on the table, that's how we're going to drive our prioritization. So the only final thing that I'd like to announce is that we are now building an underlying communication mechanism for our members to create a FIBO community. The FIBO user group is part of that. We are doing a Twitter feed. We have just launched a LinkedIn group. We have a platform within the EDM Council for managing all of our documents called EDM Connect. I'm building up the communication list. So starting from this point forward, we are now launching a new activity to bring SMEs into the conversation, to look at the existing model and to help us extend and validate the activity. So we will be sending everybody notification about that. I just wanted to kind of give you an advanced clue of what we're doing. I'd like to also thank David Saul once again for an awesome illustration of the value of not only formal ontology, but FIBO. So thank you, sir. We're really grateful. And with that, we will call this meeting to conclusion. So thank you all very much, and goodbye.